So I'm going to cover off like a market update. Everything looks so fucking good, honestly. This is going to be I'm going to be like the if this is the top, I'm going to be the absolute poster boy of this being somebody hyper bullish at the top. But everything looks so good from my perspective. I think everything is in such a great position. So let's just recap and think about where we are from a higher time frame perspective before we start diving down into too much else. I've just recorded a video for the Haven, so that's why I'm kind of like 100 miles an hour on this, and my voice is quick. So higher time frame BTC, when the market makes a fresh high through here on a weekly close, you have to give it some credit. You can't just start deciding that you're going to, go against this. This is a resistance point. I think the market is telling you something very clear here. When you close at fresh highs for 2023, especially on the back of what we've seen in terms of, recent FUD, etc., it's a very strong market, and I don't think that you should be countering against that. So we've got the breakout on the weekly. We've got the RSI coming back down to the 50 level. You all know that because it's been on like the last two videos. And I think we look good for much higher through here. We've seen now a period of consolidation, which is where everybody fucks up. So I've just done the Twitter thread, which is on basically everybody fucking up during the setup phase and then the execution phase of the market. The setup phase being a lot of you will have good ideas about when the market is going to go higher, when the conditions turn good, and you just you get this vibe that everything's going to continue up, or that we've broken, like BTC, it's broken some sort of diagonal or horizontal level that you've got, and the market looks as though we're going to go for continuation higher. And many of you fuck up during this path, and then you have a bad experience when the markets are in easy mode, which, fingers crossed, touch wood, that we enter a period of time like that now, where the markets remain very, very good and they remain easy, and you just click green and everything goes up and everybody's happy. Right? That's the idea. So during this region now, we've just been consolidating here. We've been chopping around these levels. We've been looking at trying to break out, and this is where people fuck up. And it's usually because they miss this move, or even if they don't miss this move, they just look at this move and they say, well, this is the ignition point of where the momentum has changed. Something is different now. We've broken out. We've made a fresh high. Right? I've got to be aware that the conditions have now changed. Even if you're the most adamant bear, then you've got to appreciate that something changed during this period of price action. So very rarely are people positioned from this point. They usually can't position during this, and now is the area they look at positioning. And what happens in that period of time is that you position too aggressively, so you're using size that is too large. You have scuffed expectations in, you think the market is going to continue doing that. So when it goes sideways for 5 days, it really fucks you up. And you're on the lower time frames way too much. So what happens is, you get long here, you're looking for the next leg up, it doesn't happen, you get stopped out, so you go short because you think, actually, yeah, it's overextended, it's going to correct, and then you get stopped out again when it does this one, then you think, shit, well, maybe it's taking off again, it's going to make this move now, and you get stopped out again. Classic. You're at 100 miles an hour because of this move here, and so you start fucking around in here and you start bleeding out. The most sensible thing that you can do is have spot exposure to the market or lower leverage exposure to the market, whether that be through margin spot positions or just the use of lower leverage on futures. For me, that's the best thing you can possibly do during these periods of time. Right? It really, really is. If you're trying to over-position, oversize here, you're comparing yourself to others, you're anticipating that it's going to be good conditions, and you're really trying to ramp up the size, you're going to get stopped out, you're going to bleed out, your account balances are going to dwindle down, and therefore you need to work a lot harder in easy conditions in order to make that money back and to not fuck up again. So, all of the kind of the spot positioning, the margin spot positioning is for me is the best possible route you can go down. It's like the market has made it very clear that the upside path is the one that right now it's following and has all of the strength. And therefore just simple exposure to the markets and owning is a far better method than trying to aggressively trade this on the lower time frames, getting chopped up, flip-flopping your bias, etc. Right, so that's really all I want to cover on that side. The Twitter thread is there. But don't fool yourself that you need some huge leverage positions here and that you're going to survive this. The people that are going to perform best are those who have been building spot positions and who are still building spot positions. And important for me to say in that I don't think that it's a bad idea to be building spot here. You know, people's expectations of a BTC pullback haven't materialized. We've just done the sideways consolidation. Alts look as though they're starting to take off a little bit and do a bit better through here as well. And so we'll go through some of the markets now and take a look at the higher timeframes. But I still think that spot exposure and building spot at these levels is very attractive to do. So 4-hour reset on BTC looks as though this might be the move to break this consolidation structure. This is going to push the daily into an extended region, which is fine. We have no problems with that. That's a really good sign for a strong market. And we know that really the monthly levels are up at 37, 38. Those targets haven't changed. It's the monthly levels up there that are still the most significant. Now let's go to ETH, because ETH is a very interesting market that looks very, very good from my perspective. And I'll give you the reason. I speak about the domino effect quite a lot, and this isn't some fucking bullshit term that I'm trying to coin. It just indicates that a lot of RSI structures across time frames are in a very good position. Right? And you can learn more about that in the Haven, but I'll give you a little sample here. So you've got the 4-hour chart here. We've got the RSI breaking above the 50 level. Now, we know that if the RSI and if price continues higher through this, that's going to have a knock-on effect, therefore the domino effect, to other time frames. So if the 4-hour pushes through here and we start to overextend, then we know that the 12-hour is going to do the same. Right? It's going to have that knock-on effect. Then when you look at the 12-hour, you've got a perfect bounce off this 50 level. So you've got trend up, correction, 50 level tapped, pushing away again, which is perfect. That's what we want to see. These trend continuation plays often bounce at the 50 zone. So we get the bounce at the 50, and now we're starting to push away again. If the 4-hour moves, the 12-hour is going to move. So it keeps that 50 bounce looking legitimate and moving to the upside. And then what we do is we swap to the daily. So if the 12-hour moves higher, then the daily is. Daily bouncing off the 50. You see the way that we get that knock-on effect. So impulse now on the 4-hour translates to the RSI on the 12-hour pushing away, which translates to the daily pushing away. And then what you get is you get the 3-day, big surprise, pushing away from the 50. And then you get the weekly pushing away from the 50. So you have this perfect set of confluence throughout 4-hour, 12-hour, daily, 3-day, weekly, where all of those RSI levels are at the 50 region. So when I talk about buying spot, that's why I don't think you're in any position that's late here when you're thinking about spot purchases. When we're talking about a weekly RSI 50 pushing away here, then we're looking at ETH making fresh highs. So even from this point here, then we're looking at a minimum of 15% into fresh highs and ideally 35% into 2500s. That's the region that I would be looking at from here. But it all stems from a very simple kind of domino effect through here. Domino effect of the 4-hour looking strong and pushing higher, translating to the 12-hour pushing and trading higher, the daily bouncing off the 50 and overextending for the first time, 3-day doing the same, and then the weekly doing the same. This is very much a combination trade that, again, you're not late in terms of buying spot for. And you've got a range of markets that are doing that. You've got things like LDO, you've got things like ARB, things like Pepe, that are all doing exactly the same thing. You cannot, at this moment in time, be scared of buying markets that are up 7-8% on the day. You can't let that freeze you out. Keep the higher time frame in mind. Keep the fact that a lot of these markets have this domino effect through time frames and also are sitting at prime weekly, daily, 3-day positions for more upside. So don't let markets that have shown strength kind of put you off. And kind of not be able to do anything, and you gotta make sure that you're able to action during periods of time like this. Don't be sat on the sidelines. If you're sat on the sidelines, it's because you're trying to over position, you're trying to size up too much and you need your stop to be too tight, or you're fucking around and you're too scared of entering markets. And again, usually because you want your stop loss to be tight so you can jam more of a position size into that to make more on the upside, which is really just a fallacy. Positioning, having position in this market, having exposure to this market, identifying the fact that higher time frames on the majority of charts look in exceptionally good positions. And I would position for the majority of these charts, of course, there are some exceptions to that rule. I would be able to position for the majority of this today and still be fine in terms of spot exposure. Again, still parameters around when you're invalidated and need to get out that position. But I think this market looks so good. I did say that I was going to be, you know, a great example of somebody who got bullish at the top if this is the top, because to me this market looks so good and so primed for higher across, you know, pretty much every alt out there.